All right, guys. So we got a special episode today. We got my boy. This is John Williams. John, he's got a huge following on Instagram, on YouTube, and makes really awesome real estate and finance content. John, how are you doing today, sir?
I'm doing good, man. Doing really good. Thanks for having me on.
Yeah, man. Well, I'm glad we were able to link up because, man, we got a lot to talk about. So, let's just jump right into real estate, man. What is your take? What are you seeing the temperature of the real estate market in the United States right now? How are you feeling about it?
I think that we just left one of the best selling opportunities over the last 2 years for
Mhm.
people to cash out newfound equity in their properties. I think that there's been a couple things that have happened that have allowed sellers to really capitalize on the environment. One of which is all the lockdowns. You saw a lot of places like California, New York, where there's a high cost of living. These high incomes are flooding to locations such as South Florida, where I am right now, into other areas where there's just been massive appreciation. People were able to go from like a $4,000 or $5,000 a month rental in New York City or LA to go buy an 800,000 or 900,000 or $1 million property here.
Mhm.
And so there was an awesome time to be a home seller. And at that same exact time, people were so scared of inflation that when you had the opportunity to invest and borrow money at 3% fixed over 30 years in an inflationary environment, people were willing to overpay. And so if they were paying $100,000, $200,000 over asking price for them, it wasn't that big of a deal to be able to have that great investment and then also have that hedge against inflation if they're going to be in that area or that house for a long time. And so a lot of people overpaid, I believe, for real estate.
Yeah.
And all,
Keep going, John. I'm sorry.
and especially in the multifamily sector as well. I have friends that are commercial real estate brokers in Los Angeles. And they're saying a lot of my clients are cashing out, doing 1031 exchanges, selling their properties, and going places in South Florida. And they were willing to overpay for properties. And in South Florida, cap rates a couple of years ago were 5, 6, 7%, to where people would, what a cap rate is net operating income divided by purchase price. So what that means is if you paid all cash for the building, the actual return you'd get,
Mhm.
right? So $1 million property, hypothetically, a 5% cap rate would be $50,000 a year, right? 5% return. So now what ultimately happened, there's so much money flooding here with the low interest rates, everything that was happening, and rents were skyrocketing, that people are overpaying for property. And these commercial properties, you're gonna have to refinance them in a couple of years. So you're gonna have all these people that overpaid for property. They're gonna have to refinance their property potentially at a much, much higher interest rate as rents start softening up and insurance prices are continuing to rise. It could be a problem for some investors. So
Mm.
I think we're gonna see a lot of change coming.
So, talking about South Florida, do you see the South Florida real estate market? Is it cooling down any, or is South Florida real estate kind of disconnected from the rest of the United States real estate market at this point?
So some markets I feel like are still trying to hold on, but some markets are already seeing an impact. Like you look at San Francisco, you look at Austin, Texas, you look at some of these tech hubs. We're starting to see a lot of change there. So a couple things that are really unique in the job market, especially the last couple of years, that I think have fueled the real estate market as well, kind of through gas in the fire, was people were renegotiating their wages. They were jumping into other job opportunities that are willing to pay a lot more. Well, now over the last 12 months, over 200,000 tech jobs are let go. And so what's ultimately going to happen? A lot of these tech companies, they are going to start looking for new talent, probably at much lower prices, and considering probably outsourcing to other locations throughout the world, especially as they start reducing their office footprint. So I think we're going to start to see a lot of these high salary jobs no longer be offered and people negotiating their pay downward. Meanwhile, the cost of living is increasing. Everything is getting more expensive. So we could start to see people, maybe they realize, hey, I might have overpaid a lot more for this property. Even though my interest rate's 3%, I can't make the payments because I lost my job and I can't find a job that's suitable that's offering a similar salary.
Yeah, it's interesting you bring that up because we are seeing these big tech companies with these massive layoffs. And I wonder, I don't know if there's a correlation to this. Do you think there is that the advent of AI and, the AI explosion that's happening right now is just a coincidence these layoffs happen? Is this just something going on in the economy, or does the AI play any part in this?
Yeah, AI. I think what's ultimately happening right now with AI is I think that it's so advanced and it's so much more than what the general public realizes I think that they're just kind of giving us a small little speck as to what AI is, get people kind of excited and get them open-minded to it. But I think over the coming couple of years, they're going to start opening this up more and more and more. And there's going to be more and more jobs that are going to be lost to AI.
Yeah, the saying that Skynet has become self-aware, I'm terrified by the AI. What I try to tell my audience is like, let's find ways that we can make money and capitalize this, but at the same time, be aware of the dangers that this is going to take jobs. This is going to hurt people and can be used by tyrannical governments for some type of dystopian world that we may be going into. But getting back to real estate, John, so if I'm an average person, working a 9 to 5 W-2 employee, do you still see opportunity for, the American dream of home ownership, or is that kind of going away in your eyes?
To be honest, there's nothing worse right now than being the average person.
Mm-hmm.
Yeah, the reason I say this is because the middle class is getting absolutely destroyed right now. So if you feel like you are the average person, the big question is, how do you get outside of the middle class and do it really quickly, like within the next 36 months? Because the middle class, they're going to essentially, what we all know is going to be coming is likely going to be subsidies and assistance from the government. There's just going to be no other way. Everything is so expensive, and it's only likely going to get more and more expensive. As interest rates rise, the cost of service debt is going to get more expensive. Think credit cards, auto loans, personal loans, everything is going to go up, right? And so they're going to likely come out with that central bank digital currency, which they've already been discussing. And so what are they going to do, right? The central bank digital currency is likely going to, it's no longer like a theory, like I think it's coming out in June this year.
Mm-hmm.
So as that starts to become more real, it's going to be the people that have high incomes that are going to have options. And so that's what I think is going to be most important, is just not thinking about, oh, how can I invest today, but more of like, how can I increase my income to such a high level to where when the opportunity starts to present itself, I can go out there and pick up asset after asset after asset.
Mm-hmm. And that's, I guess, historically been rich people's philosophy, to beat inflation by investing in assets.
Yeah.
So the average person, if you're middle income, inflation is going to hurt the middle class more than it's going to hurt the rich class, because most of their money is in assets. So if you're somebody and do you still see an opportunity for them to have financial freedom through real estate, through, would you say single family household is still the move right now?
No, so the one thing that I don't like about, and so to speak quickly on inflation in the middle class, I read a headline the other day. I was saying that the average American family, due to inflation over the last couple of years, has seen an additional cost of $11,500 per year, just cost of living, right? And so you think about what that actually means on non-taxable or on taxable income. The average person making 50, 60 grand a year, say they're a school teacher, and they're supplying food and clothing to their children, $11,500 pay cut. That's like 20% of their income, right? So if you were going to say, let's invest in real estate, if you were to buy a single house, and you go put your life savings as a down payment into this single family property, and that person stops paying rent for whatever reason, maybe they lose their job, they can't afford it, that ultimately puts you in a very vulnerable situation. And so because of that vulnerability, I think the most important thing is you want to invest in assets that are going to provide security, but not put yourself in a danger zone by doing it. So that's why I say increasing income is going to be so crucial. I feel like making $100,000 a year today is, like making $50,000 a year just 5 years ago, right? It almost has the same type of net purchasing power. I mean, when I was this was like 2016, 2015. Now my current wife, we were renting a place in Hollywood, in Los Angeles, $1,300, right? $1,300 in Hollywood. Now, if you go rent that same apartment, it's probably $2,300 to $2,500, right? So everything is just going up. So that's why I say, like, 50,000 5 years ago would probably get you what 100,000 today would get you. So if you're thinking in the future and you're seeing what's happening in the world, what's ultimately going to be happening is you're going to see all these small business owners start outsourcing to other countries, driving incomes down even further in America, especially as tech starts to take hold. That's why I think income should be the key driver right now. People should be focusing on that, not just trying to invest. If you're making, sub 100K.
Yeah, finding side hustles or, finding ways to get promotions at work or starting your own business, all great ideas. Now, what about these different ways of house hacking? Maybe perhaps putting, an extra room on Airbnb or perhaps even Airbnb in your house and going to stay with a family member. Is this stuff that you maybe recommend, or is this kind of fads kind of playing out the whole Airbnb thing?
So I don't like Airbnb, but I love house hacking.
Hmm.
I think like I made a lot of money house hacking, and I think it's an incredible opportunity. But if it's done right, so many people would say house hacking would be defined as potentially hacking up your house, meaning like you have 3 bedrooms, you rent out 2 of them, get income from those 2 rooms. I don't like that idea of house hacking. The idea that I do like is finding a value add property, something that maybe the rents are depressed. You're able to go in there, you're able to, fix up one unit, you could live in that unit, you can increase the rents on the adjacent units, and the adjacent rental income can offset the cost of your housing. That is a successful investment. You're able to reduce your housing cost to zero, yet
Hmm.
have an asset to where the tenants are essentially now your employees, and that structure is now your business. So you basically just bought a business and you get paid to have it. I mean, that's a great investment, especially if you can find a way in which you can, increase revenue even greater than that. Like for example, a place I bought in LA, I bought this place years ago. It was a little triplex, just a duplex in the front, a little house in the back. Bought it for just over 400,000, and I went in there, fixed it up, increased the rents. I demolished the house in the back. I built a duplex, sold it for 1.4 million. So it's like you can find deals, find things that make sense if you know what you're looking for.
Yeah, obviously, ideas like that are great, and there's still a lot of opportunity if you're buying the right real estate. So, what I
Yeah.
want to ask you, you brought up, the credit card debt in this country. I believe we're at the highest the credit card debt has ever been. So, one thing I think people are forgetting about is how important their credit is in purchasing real estate. So, what are you seeing that's going wrong with people's credit?
I'm seeing so much because I have a credit repair company.
Mhm.
One of the big problems that I'm seeing is people either have something on auto pay and something happens and the payment doesn't go through and they forget about it and it starts hitting their credit. The second is co-signing for a family member that's fallen into tough times. So
Mhm.
they sign on the dotted line for their family member to get a car or to mortgage, whatever the case may be. And then that family member defaults and then they can't afford the payment. So they both go down the ship. So you want to be very, very careful co-signing for anyone. You want to be very careful with your auto pay to really verify and make sure that these payments are going through. And you want to make sure that if you have a credit card balance and you can't afford to pay it off in total, you should be looking at doing a balance transfer and transferring that high interest credit card debt to a 0% interest card. There's a variety of different options right now. And then you could basically get out of debt at no interest. So those are a few things I would suggest.
What about I had read this before that perhaps just calling the credit card company, telling them what's going on, making the minimum payment. If you make the minimum payment, does it not ding your credit?
Yeah, if you make the minimum payments, yeah, it doesn't ding your credit. If you make
Hmm.
below the minimum payment, it will ding your credit. So you have to make at least the minimum. The issue is though, if you borrow, let's say $10,000,
Hmm.
and you make the minimum payment at a lower interest rate, say 20%, most credit cards are 26, 28% interest. It would take you 9 years and 1 month to get debt free. 9 years, and
Wow.
you pay back almost 12,000 in interest. So that's not the strategy I'd suggest. I'd look at balance transfers and trying to find out a better vehicle to get out of debt.
Yeah, with all these obstacles, it's seeming that, the American dream, which I think part of the American dream is home ownership, is getting harder and harder to achieve for the average American. Now, if you're a W-2 employee, and let's say you find a single family residence, something that is going to be your long-term house, you think is a good deal, what are you recommending people put down? What do some people say to 20%, some people say put as little down as you can. This is stuff that's really not taught in school. What's your kind of thoughts on that?
My thought is that the first time home buyer shouldn't buy a house. They should
Mhm.
buy a duplex or triplex or a fourplex. The goal of the first investment should be for that first investment to be a vehicle to move you forward in life. If
Mhm.
you're buying a house, you're buying a pile of cost that you're going to have to fulfill on, right? Every month, whether it be repairs or your mortgage whatever it may be. But these are costs you're now responsible for. So you put yourself in a vulnerable situation. You lose your job, something happens. But if you buy a triplex or a fourplex, these are all considered residential. You can still put the same down payment down as you would a house, but now you have options. You have 2 or 3 tenants that can help offset some of these costs. And believe it or not, a duplex, triplex, fourplex, these properties are priced within striking distance of what a house would be priced at. So at least in a lot of markets. So right now, you're also going to see a situation where a lot of mom and pop investors are going to be offloading some of these properties.
Well, yeah. So you're saying that because of the inflation we're seeing, it's hurting mom and pop real estate investors who are trying to capture that equity. So they're selling their properties, and that might be an opportunity for people.
Well, so I was looking at some interesting data in October. Over 30% of U.S. small businesses missed their rent in full for their office.
That's unbelievable. I've seen that. That is
November
unbelievable.
was north of 40%. So it's picking up, and 46% of the U.S. population works for small business. And so you look at how much property that they own. Small mom and pop landlords own over 20 million housing units in America. So if they can't pay their office, right, what does that mean? That means that a lot of their employees are going to get laid off, right? And it means that these property owners, these small business owners, are going to have to fend for survival soon, meaning that it would make sense that they would start to sell off certain assets to make ends meet, such as single family homes, duplexes, triplexes, fourplexes.
Well, something we're seeing, the Fed aggressively raising interest rates to combat inflation, which I don't think it is combating inflation, but the Fed has said that, they're going to continue to raise these interest rates. Where do you see the ceiling at this? Is it 10%? I mean, we've seen 10%, I think, in the 80s. Is this something that's realistically could happen in our lifetime?
So it's really hard to predict what the Fed will do. I feel like this whole economy is like a game of musical chairs, and the Fed controls the chair and the music. And so what they will do, like, we're not in a real economy any longer, in my opinion. I mean, when rent was optional and the stroke of eviction moratorium, utility bills were optional, student loans, I think, are still optional. They were utility bill, all these different things were optional, right? And so everything was pulled away, and then they just pumped the entire economy up with money. And now they're pulling that money out of the economy. And now all that's left is a lot of debt and a lot of dependence. And so seeing how they play this next will be interesting, but I don't think it's going to be a soft landing like they alluded to.
So essentially what you're saying is the amount of money in free cash that we've printed in the last 2 years with the, lowest historically low interest rates has propped up the not just the economy, but especially the real estate market. And now we have to come down from that.
Asset values, but a lot. See, the thing is, the rich always get richer, right? Look at all of the big companies. What they do? Look at Jeff Bezos. Look at Bill Gates. Look at Satya Nadella. Look at Bezos. Look at Elon Musk.
Record profits.
And they liquidated tons of stock at the height, right? They were Zuckerberg sold shares every single day in 2021. Elon Musk sold 40 billion in Tesla stock over the last 12 months. Satya Nadella sold 50%, roughly 50% of his Microsoft holdings as CEO of Microsoft. Bill Gates and Bezos both got divorced in 2021, selling off tremendous portions of their holdings at the height of the market, right? What did they all do? They pulled cash off the table. Microsoft right now sitting on 107 billion in cash, and they just invested in OpenAI. What are they going to do? They're likely going to sit on all this money. They're going to wait for the blood to hit the streets, and they're going to go out there and pounce and buy infrastructure, such as warehouses. They're going to start to buy farmland. They're going to start to invest heavily in real estate. They're going to start to invest in AI and all these different opportunities, and it's going to allow them to just get richer. Whereas the middle class, what did? They went out there and they bought the new Lexus. They financed it at 30% over sticker price. They have fat credit card payments. They're in a lease that they can barely afford. So people went out and invested in a lifestyle, whereas they took cash off the table waiting to invest in what they intend to achieve next, which is basically domination of the economy.
Yeah, and John, I'm glad you brought that up because at this point, it's not coincidental that the rich have gotten richer in everything that we've gone through, and
Yeah.
it's harder and harder for the middle class to make it, and it seems that we are being squeezed out. And just the fact that for the middle class, most of their expenses is housing, energy, main necessities, and if those get more unaffordable, then it's hard to invest. It's hard to
Yeah.
invest in assets. So where do you see the opportunity in all of this? Because, we hear the stories, you get rich in a recession, you get rich in a depression. Obviously, if you're smart with real estate, there is some small opportunities, but it's getting harder. But where do you see the opportunity? Is it stocks? Is it crypto? Where do you see it?
I think the biggest mistake right now is following someone else's belief. I think that
Mm-hmm.
what you should do, what everyone should do, is to really do their own research and to look and really make a smart, risk adverse decision, making investments based on value rather than speculating. So
Mm-hmm.
many people were like NFTs, crypto last year. Everyone was making money, right?
Mm-hmm.
Now, all those people are like, oh, Bitcoin's coming back. It's going to 150K. It's like, is it, or is this thing going to deflate again? You don't know, right? And so
Mm-hmm.
since you don't know, yeah, I would suggest investing only what you're prepared to lose, right?
Mm-hmm.
And so that if you have money to lose that you're willing to lose, then you should put it in crypto. You should put it in NFTs if you believe in it. But if you don't, then what I would suggest doing is not putting that money on the table and instead pulling back, learning, studying, paying attention to history, looking at what's actually happening right now, making smart, well-informed, value-based decisions that are going to allow you to build a foundation and grow wealth during the uncertain times. So
Mm-hmm.
it could be real estate, it could be stocks, it could be all these different things. But I think a lot of stocks are still well overvalued. Um, a lot of people have all their money stuck in the stock market. I know people in my own life that invested so much money in Tesla, that invested so much money in all these different tech stocks that would love to get their money out, but they can't because they're down
Mm-hmm.
60, 70, 80%. So maybe stocks will fall again. Maybe they go back to QE and they start turning money printers on again and the stock market starts to rise again. Like since it's a gamble, you have to ask yourself if you're willing to take the gamble.
I'm glad you brought up quantitative ease, and it's funny you brought that because I actually just bought some Tesla stock yesterday, get my average cost down. But you
Yeah,
brought up QE. Now I was reading an article, so the Fed has hit its debt ceiling. I think I seen something today that they want to just get rid of the debt ceiling, where it's just unlimited borrowing. So is this unprecedented times? Because I know we've hit this debt ceiling before and have pushed it back. So is this unprecedented times we're in with the debt ceiling?
every the whole thing to me, the whole thing doesn't make any like we borrow this money from who, right? Like who determines the debt ceiling? Like who determines any of this, right? It's one big movie. We're all just watching a big movie. Um, so that's why I say like just make sure that when you invest, you're making smart investments. I love real estate. But again, like just make sure that you're going to position yourself because like what you mentioned, like with this debt ceiling, like I think they've changed the debt ceiling over 50 times in the last like 50 years. So it's like ever who knows? Like
Mm-hmm.
you look at what's happening to BRICS nations right now. If you're paying
Mm-hmm.
attention to BRICS, this is
Yep.
crazy, crazy times. You have all it's like a third of I think it's actually almost like two-thirds of the world's population is in BRICS or is and like trying to apply to become in BRICS. They control the labor, they control the products, they control the gold, the minerals, they control the oil, they control everything. Like the US dollar was based before on energy. There was the petrodollar, right? Now we're trying to get off of fossil fuels. Now what is our defense? Is it the army? I don't know about that, right? Like we'll see. We'll see how this whole thing kind of like plays out. But I was listening to Stanley Druckenmiller, who partnered up with George Soros about 20 years ago
Yikes.
in the 90s. And he's a brilliant guy, like extremely
Mm-hmm.
intelligent, very, very wealthy. He said that he would be surprised if the US dollar was the reserve currency by 2030, right? Um, so yeah, it'll be interesting to kind of see.
So yeah, there's a lot of talk on that. Other nations you have talking about that they're getting away from settling in the U.S. dollar, getting away from this petrodollar. We're seeing Russia and China's central banks buying a ton of gold. So I want to ask you about that. What's your take on precious metals? Is that perhaps the best hedge against inflation? Maybe.
I like gold. I like precious metals. The reason for it is you look at what like you look at history,
Hmm.
fiat currencies never work. They've never
No.
worked in history. They always rise and they always fall. Gold has been a store of value before anything, and I think that you look at the actions of China, you look at the actions of Russia, Saudi Arabia, India, they're hoarding gold. Central banks all around the world are hoarding, right? So I think that gold could have its day in the next decade. But is it something that maybe you trade in and out of and try to make some money on the pumps? I don't know. I don't think so. That's not my skill. But I think long term, I think that gold will probably be a strong investment.
So, I like what you said because you're right about, fiat currencies have always failed historically. And I think, the US dollar's reign. It's unfortunate because, guys, we want the US dollar to be as strong as it can, but it's our Federal Reserve and their policies which are hurting the dollar. So, if the dollar isn't the world reserve currency, I don't think it would change, hopefully not by 2030. What do you think could be the new world reserve currency? Some type of digital currency backed by gold, maybe?
I think it's probably a basket of reserve currencies, like what
Hmm.
BRICS, because World Economic Forum, they said on their website that by 2030 it's going to be a basket of reserve currency. So it's like they're saying it, and then you look at BRICS, like
Hmm.
that's exactly what BRICS is attempting to be, right? So it's like, okay, that's what they said 2017. Okay, so here we are. So, and you look at actually who's in the World Economic Forum. A lot of people thought like, oh, it's nothing, but it's like it's literally every single big company, it's every single big bank. Um, like any billionaire
Hmm.
is likely associated in some capacity with the World Economic Forum.
Hmm.
So I think it's something that people should take into consideration. I think it is real. I think something is going to happen around BRICS, and yeah, I think precious metals are going to do well, like to put it lightly, or because of that.
Yeah, you brought up the World Economic Forum, guys, and I'm happy to see that more people are bringing light to this organization, and what their agenda truly is, and it really is, an us versus them, the haves versus the have-nots, and this has been the story of history. If you think about it, it's always been rulers oppressing the people, and any kind of way they can divide the people gives them power. So what we're seeing coming out of Davos in the WEF and Klaus Schwab is this Agenda 2030. You will have nothing and be happy. You won't own cars. You won't own meat. John, do you think that there's any chance that because of so much light being shined on this organization that we're able to stop this?
No, I want to be optimistic. I'm an optimistic guy, but you think about it, like think about think about what is actually happening, right? If you look at, and that's why I say you want to get out of the middle class, because I think that's the target. If you're
Mm-hmm.
above the middle class and you can get, a significant net worth in the next few years, that's why I say like it makes sense to invest your resources in building a business, invest your resources in scaling like something that could really take you above the middle class, because I don't think that the wealthy, the multi millionaires are going to be the ones that are no longer able to eat steak, right? Like those people are
Wow.
still going to eat steak. Like
Mm-hmm.
they're going to still probably travel. They're still probably going to own real estate and do things, but it's going
Mm-hmm.
to be the ones that rely on some type of central bank digital currency or some type of government assistance that will be, I guess, at the mercy of what they deem as equitable and fair and best for the environment.
Yeah, it seems that they use the climate narrative and climate, to posture themselves as the doers of good, but really these climate and these net zero policies are actually pushing people into poverty, which seems to be, maybe that's not all their plans. Maybe some of them this is happening unbeknownst to them, but the actuality, what's happening is net zero and Green New Deal type policies are pushing people into poverty and are hurting the middle class. Like you said, not hurting the elites because they're protected from inflation.
Yeah, you look at Davos. There's like 1,000 private jets flew in there, right? I think one of the guys said like that we would greatly reduce our world emissions if 1 billion people stopped eating meat. 1 billion, right?
Mm-hmm.
He didn't say 8 billion people. He said 1 billion. Who do you
Mm-hmm.
think that billion is going to be? Do you think the billion is going to be the top or the bottom?
Mm-hmm.
I'm betting it's probably going to be the bottom, right? In terms of the economic hierarchy. So you want to try to climb as high as you can in that hierarchy in the coming few years, and then I think you should be okay.
Well, like you said though, John, like, because of the inflation, we can't save our way into that. So somebody's saying like, oh, well, I'm going to work extra overtime at work and keep stacking. But,
Not gonna work.
I like your plan though, where he needs to evaluate his life and there's opportunity there, whether it's crypto stocks, and he needs to make his best decision. I think I agree with you on that. Now, a strategy that's come across to me, and I thought it blew my mind because I wish I would have known about it when I was younger, is this concept of wholesaling houses. What
Mhm.
is your take on that? And again, guys, speak to, find out what the laws are in your state. Laws are different on wholesaling. We're not recommending you do this. Do your own research. But John, could you kind of break down what wholesaling is and do you see opportunity in it?
Yeah, so wholesaling, what you do is you essentially make the spread between what the seller is willing to accept on the property and what the buyer is willing to pay for it. So if you
Mhm.
found a seller that's desperate that wants to sell the property for say 200,000, and you found a buyer that's willing to pay 300,000, then you'd make $100,000 assignment fee on that, right? So it can be extremely lucrative to do a wholesaling deal, but the caveat is that you need to, it's basically like cold call and door knocking. You need to have a team of callers. Like you need to get aggressive to be able to make those contacts. I was a real estate agent in Beverly Hills for a decade. And I'll tell you, like a lot of that traction, a lot of the leads that I got were through cold calling, through door knocking, through putting my
Mhm.
face out there, through getting in front of people. So it's not going to be an easy way to make money, especially in an environment where where sellers still think that maybe it's 2021 again and they're able to, cash out at the height. And a lot of buyers are pulling back saying, you know what, cost of our money's going through the roof. I think we're going to see prices go down. So you want to make sure that you're going to buy a really good deal that's going to, make sense.
Mhm. And there's
Or
ethical ways. There's ethical ways to wholesale, correct? And you don't need any license. This is something that somebody could just learn how to do on YouTube, correct?
yep. Yeah, you don't need a license. Yeah, you literally can. I basically just told you how to do it. You just
Mhm.
need a script. Like you just need to find motivated sellers. And you can do that like easily through look up tax liens. You can look up defaults, who's defaulting on their property, and try to find out who has equity in their property that actually has the authority to sell it.
Mhm.
Um, so like you can go out there and you can do this. I do believe that there's easier ways to make money online. I feel like there's a ton of easy ways to make money online. Yeah, I mean, like I would look at what you can do that will require very little manpower, that will require very little upfront expense from you, that has the potential to make 100,000 a month. Like that is all I would be thinking of. How can I make 100K a month online with very little startup capital? And there's a lot of ways to do it. So that's what I would be looking at.
What are some of them? Drop shipping, maybe something like that.
No, so
Affiliate
like
marketing.
here's a really good way. Like, you look at all the businesses in America, right? So
Mhm.
like all the profitable ones that are small, but like historically make a lot of money. Accident attorneys, doctors, right? Accountants, CPAs. What do these people do when they want business? They try to run ads on billboards, right? They want to do historical things that have worked, right? And it costs them a lot of money to do this, right? Tons of money, but they don't know anything better, and these people are 50, 60 years old. They have like their old way of doing business. If you can step in and bridge a relationship and simply say, hey, what I can do for you is I can run not only your online advertising, but I can actually have people call and prospect and generate additional business and revenue, and I can help reduce your overall cost. Would you give me a spread on the money I can save you? And you'd be surprised. A lot of people would be like, yeah, I would do that. Right. Like you could find callers that are in Pakistan and India that don't have an accent, that literally you would think that they're from America, for $10 an hour, right? Like
Mhm.
answering calls. You can run ads on Facebook, driving traffic to them, have the callers pre-qualify the leads, and just hand off the leads directly to the office. They just close them and you get a commission. Like there's so many different ways you can make money.
Yeah, so it seems like what your strategy is, and I think I like it, is that obviously make as much fiat as you can right now, but finding smart side hustles that could potentially become, because most people aren't doing this. Most people go to their 9 to 5 and they get home and they watch Netflix and play video games. They're not trying to. So just by doing it and trying it, you're already elevating yourself, correct?
Yep. And I feel like one of the big cancers to society right now is TikTok. Because what that does, and I've even found it myself, it really impacts your attention span.
Mhm.
Like allocating time, 30, 40 minutes to reading is like harder today for most people than it was 10 years ago, right? Like actually sitting there and picking up a book. Starting a business is not easy. It takes work. It's like a hassle. Everything is great in the beginning, and then all the problems start coming. So it's like when you can kind of get away from like a TikTok or one of these platforms that push you into having like a very short attention span, and instead pick up a book and start learning and reading from people that have done it, you'll find more results, I think.
Yeah, these, TikTok and the YouTube shorts and stuff, they really are, that's why I like your content where at least it's educational, but a lot of this is mindless and people don't understand how your brain's wired, the dopamine receptors, and you're just getting too much free dopamine, which is keeping you from going after the things that are supposed to bring you dopamine, like, creating business, creating wealth, educating yourself. Yeah. So so I think the idea of, having people sit on the sidelines and, using your time to educate yourself on how to make money is a good strategy because, so I'm guessing that you don't think the bottom's in for, traditional markets right now.
No way. What
That's
like,
terrifying.
What
John,
bottom?
that's terrifying because, tech stocks are down 60 to 80% right now. So it's like, if we're not at the bottom, yikes.
Let me ask you this question. If we're at the bottom, why did Google lay off 12,000 yesterday?
That, I was thinking that same thing when I bought the Tesla stock. I was thinking that I was like, because Tesla is one of those stocks where I'm like, okay, dude, this could easily go up 30% or down 30% in the next 3 months. So you're right.
Yeah. Like you look at this, right? Like Amazon's shutting down call centers. You look at a lot of you look at what Google, Twitter, Facebook, you look at or Meta, you look at every tech company, they're continuing to lay people off. Salesforce, right? Like why would they be laying people off if this was the bottom? The reason for this is, I believe, is that we're going to see advertising pull back. That's how they make a lot of their money. We're going to see people get much more fearful, and there's going to be less money to support their staff, right? And so they want to take some of their risk off the table. Amazon realizes, hey, people aren't going to have as much money as they did, a year ago, 2 years ago, to sit home and shop on Amazon. Let's pull back a little bit. Let's see what happens, right? And so that's what I think. I think that they realize that 2023 and 2024 probably going to be a lot harder. Yeah.
So yeah, it hurts me to agree with you, but I'm constantly buying real estate, stocks, crypto, but we are entering some unprecedented waters. And going into 2024, we have a couple of things that are happening. One, obviously, the presidential election. We still have the brink of World War III, which in my opinion, we're kind of in World War III right now. But there's another event that's happening, and I want to get your thoughts on it. The Bitcoin halving is coinciding with all these other events that are happening, and historically, we've seen in a Bitcoin. I get it. History is history until it's not. Do you see the Bitcoin halving and perhaps a decoupling of Bitcoin from traditional markets? Do you see that happening?
See, the thing is, this is my belief, is that when people are pushed against the corner, they start to sell things that they otherwise wouldn't sell, right? Like they are forced, even if they believe in Bitcoin, even if they believe in whatever it may be. If it comes down to food and X, they're going to choose food.
Or rent or mortgage payment. Rent or mortgage payment.
Yep. What about the car payment, right? Like people are going to have to make decisions. And the last couple of years, the decision was to invest in Bitcoin to get away from the governments and to get away from what's happening to the current fiat system, right? And to really take control of their own wealth. Like people invested heavily, right? But at the end of the day, all their bills are going to be due in USD, right, in America. And so with that being said, I wonder how much Bitcoin, because you look at Bitcoin's chart, with the exception of like the last, even like really the last week too, it followed tech stocks, like it followed the stock market. And so if we step into a really bad economy, which we're not yet in my belief, then I don't think that we could see a situation in which Bitcoin skyrockets and everything else crumbles. That's my thought.
So yeah, so you don't see perhaps a decoupling happening now. Whatever we're going into, whether it's a depression, and I think there was a study of how long the average depression lasts. I think it was like 16 months or something. I forgot what it was. So, but if we go into that and we're positioned, like you said, we're sitting on the sideline with fiat, we're working overtime, whether it's Bitcoin or real estate, that's where the opportunity is going to lie, or tech stocks, whatever you're into, you might be able to literally catch the bottom. Is that correct?
Well, so if you look at it this way, they say real inflation is 70%. I think it's 25%, right? So if you're making 100 grand and you're saving 20 grand a year, 25 grand a year,
Mm-hmm.
that's not that great. Or like if you're losing 20, 25 grand a year, just due to inflation, it's going to be hard to save your way out of that, right?
Mm-hmm.
And which is not obviously a great outcome. And so what you want to do is you want to make sure that you're not going to invest to lose any money out of the fear of losing the 20, 25 grand. You don't want to invest in something that could lose you twice that. So what I would suggest is owning businesses and trying to get into the right businesses that offer that opportunity to get you away from the those razor thin margins of trying to beat inflation with the current salary if you're
Mm-hmm.
making a normal salary today.
Especially boring businesses, recession proof businesses. Now, John, what I want to ask you is, what is the next Bitcoin? And what I mean by that is because what me and my friend circle have talked about, we believe the next Bitcoin is going to be land in the country, acres, in the middle of nowhere, Mississippi, North Texas, North Louisiana. What do you think? Do you think that like actual raw land acreages, is that the next Bitcoin? Is that the next bull market, perhaps?
If it has water, it's
Mm,
associated. Like that land needs to have access to water on site. Like you need
mhm,
to have. Michael Burry was saying this too. Like you need to have land that has access to water, so that way you could grow food, you can produce food, you can live off the land if you wanted to.
mhm,
Not saying you would, but I'm simply saying like that has value, significant value.
mhm.
So yeah, and with land, you want to make sure that you're going to be able to make those tax bills. Like you're going to be able to actually monetize that land. So you want to do your research before you dive into it.
Now, going back to the World Economic Forum, we've seen not many, but we've seen a few politicians actually come out and speak against. One being Florida Governor Ron DeSantis has said World Economic Forum policies are dead on sight in Florida, I believe was his exact quote. Do you think that this is going to become a thing, or do you think that most politicians are aligned with them and that this is just theater?
I mean, my honest opinion is I live in Florida. Still my
Mhm,
place. I live in Florida. I was actually looking at some of these new climate laws that are coming for real estate in New York. It's called Local Law 97, and they said that the fines in 2023 will be about $200 million for landlords. And I'm like, huh, okay, well, where else? Well, if they don't do their upgrades, right? These new energy efficient upgrades. I was like, where else is this happening? It's in San Francisco. It's in LA. I'm like, okay, well, New York, LA, San Francisco, Houston, Texas, and Miami, Florida. They're like, okay,
wow.
well, they're coming with the same climate regulations in New York that they're coming with in Los Angeles or that in Miami and Houston, right? Do you think the big question is, do you think that they would allow someone like DeSantis or Abbott to stand up and prevent it if every other country is following suit and every politician in America, with the exception of following the suit? I don't think they would let two men get in the way of all that. So I think that they're going to definitely probably stand longer than the rest, but they're already allowing all the same things.
Mhm. Yeah, what I stress to my audience is, don't put faith into one politician. That's probably one of any, right or left. Don't put your faith in politician. Do stuff like what John's saying, financial literacy and education, because I guess what you're trying to tell us, John, is we can't avoid what's coming, but we can, in a sense, delay it by buying our way out of it, or being shielded from it by being in the wealth category of the elite, because the tax laws, all the laws are written by them and benefit them. Is that what you're saying?
Yeah, I mean, like I think that the next 3 years, everyone has the opportunity to, if you have internet access. I mean, like I have a team that they're international, right? And they
Mm-hmm.
work. If you have internet access, you're able to do anything, like really do anything. If you put the effort in, and the more money you have, the more opportunities that you have, the more flexibility you'll have with the upcoming changes. That's what I believe. I feel like being in that position of the middle class, which America is built on the middle class. Like I love the middle
Mm-hmm.
class. Like I was every job in America, every real job is like a middle class job in America, like mechanics, like school teachers, right? Like they basically supported and built this country. But now these people are the target, right?
Mhm.
And so you just want to position yourself to where you have, flexibility because of all this.
Yeah, so I'm actually in a situation right now, John, where I have a couple properties, have a ton of equity over the last couple of years have built up, and it's multifamily properties receiving, good little cash flow. And then what I get into, it's like, okay, one, should I sell? Or two, what about this Burr method? Is this Burr method, is this still a good method to acquire a lot of real estate, or would you say stay away from Burr method because we don't know what the market's going to do?
It's interesting to say that because I was actually reading an article from Politico, based on from the White House, them saying that what they want to do is they want to do a national rent control, and basically fix pricing for housing, and they want to, you guys can look this up. This is pretty crazy, and they want to pursue predatory landlords for price gouging, and so who is who's able to actually define what is price gouging? And I said, and I did a YouTube video talking about this. I said, imagine if I were selling paper cups, right? And I were to be able to say, you know what? I'm going to go look at all the other companies that are producing paper cups and define what the price is, right? And let's say I said this paper cup's only worth 15 cents. And I go after all these companies and say, you know what? The new price is 10 cents. And they're like, oh, well, I'm producing it for 11 cents. So they go out of business, right? And so then you get to acquire all these paper cup companies. When they're able to go and they're saying, hey, we're going to pursue landlords we call, predatory landlords or price gouging landlords, and we're going to put a cap on what rents can be increased by. But yet property taxes are going up, the cost to actually maintain and service the property is going up, everything else is going up, and interest rates are going up. You have to ask yourself, well, how can a property owner or an investor properly manage or operate that building under those circumstances? And that's why with commercial properties, I think that it's a little bit more risky versus say like a 2 to 4 unit property where you can buy a 30-year fixed rate property. You can buy this property with a fixed rate debt, right? So you kind of have fixed costs going in. You can buy the property. You have more flexibility. You just want to make sure you're getting it for an incredible deal, so you can pivot with a lot of the new regulations and changes that are they're trying to push forward.
Yeah, it's interesting. You left off one key thing to that, and it struck me. I was at an event, and a friend of mine was talking about, she was on stage and she was speaking about the rising of rents and what's going on, gentrification, these type of things. And I'm sitting there listening, a complete stranger next to me as she's talking about, fighting the rise in rents and, middle class getting squeezed out of the city. This lady, unbeknownst to me, leans over and she whispers in she don't even know me. She whispers in my ear, we're raising the rents because our insurance rates have doubled. And I'm like, yeah, but like, it's a shame that, people don't really understand this. And it, again, they divide us, but it's really them. You see what I'm saying? Creating the division through stuff like insurance, which I think that insurance is one of the biggest scams, in this whole country, home insurance I'm speaking of.
Yep, 100%. Like people, it's interesting because they point the finger at the landlords the problem, but the same thing as they did that with the oil companies. They pointed the finger. Oil companies are predatory. They make record profits, this and that, right? But they were shutting down Keystone Pipeline. They shut down all these different pipelines. They're reducing the amount of supply. Obviously, prices are going to be going up. The cost of inflation, the price is going to be going up with drivers, with hiring. Everything is going up, right? And so when they point the finger at the landlord, but yet have the direct control of saying you need to have insurance on these properties, if you have a mortgage, it's basically like they have a lot more authority than they lead on through the mainstream media headlines.
Yeah, because if you're an investor in real estate, you're looking at the cap rates, you're looking at stuff like that, and then you're factoring all your cost, and then you're saying, okay, well, I can afford the note. Well, I live in South Louisiana. Obviously we're hit by a lot of hurricanes. Our insurance is, if you can even get insurance, because so many of the big ones are leaving. Well, John, what happens when the insurance companies go out of business, and who's going to be left? The government? Yeah. Then what happens?
So, I bought a property in Florida. I got a really, really good deal on it. Lady passed away and they needed a fire sale this property. We were renting. And, when we sold, we came here, rented something, kind of figured out what we wanted to do. Landlord doubled the rent when high season came because we're in a tourist area,
Mhm.
and we ended up buying a property, and the HOA has increased 40% over the last 12 months, 40%. And now, because of the insurance, they're saying that we need to redo all the roofs at the property. And because of that, it costs $2.5 million for the construction. And so everyone has to pitch up potentially an additional $200 per month for 10 years, right? So meaning that the HOA would have basically doubled. So
Mhm.
like prices are, I was talking to an old lady that lives across the way. She's like, I'm gonna have to get a second job because of this. Like, this is crazy. So it's like insurance prices are likely only going to continue rising, and they're going to say the landlord's a problem. But just look at anything that you buy, right? If the cost for the company goes up, they're going to push it down to the consumer. The company's not just going to pay it and suffer the cost. They're going to pass it down to the next person. Same
Mhm.
thing with renting. Same thing with property owners. Same thing with all of it.
Mhm. Yeah, so with inflation, a lot of times these big corporations are raising prices. The prices are not going to come back down, even if they are able to scale back to where they were. They're like, oh, if they're willing to pay this, we're going to keep charging this. But John, I want to ask you about something else. I was seeing this all over social media. Bank of America customers going to Bank of America, filming little candid videos. They
Yeah,
can't get their money, and I believe what the term for this is, you've heard the term bail out, a bail
bail in.
in.
Yeah, yeah,
Yeah. So is this something that, I mean, dude, this is terrifying. This is terrifying. If you haven't
yeah.
seen this, John, what's your thoughts on it?
I've seen it. Yeah. I mean, I saw a video from the FDIC saying something about like bail-ins. I don't know if you saw that, which is also going viral. They were talking about this potentially happening. Like that's the other thing is like people just need to be ready for the unexpected, and that's why I feel like having businesses that are producing cash flow, ideally multiple streams of income, having opportunities. So it's like if you stepped into a problem, you could simply change banks. You could, there's opportunities like you could pivot with the times. Because I think things are just going to get real. Like a year and a half, or like a year ago, year and a half ago, I was a seller. Like I wanted to sell. Like I wanted to get cash. I wanted to cash out of the market. 2018, 2019, 2020, I was a buyer. Like I was like, this is a great market. Now I'm more of like along the lines of like, I will buy, I will invest if I find something great, like a real distressed seller, like a really exceptional opportunity. I'll do that. But right now, I feel like the best thing people could be doing is investing in their education and growing revenue, because like you mentioned with the bail-ins, like you mentioned with everything else, like you don't know what's going to happen next. So just
Mhm.
money equals opportunity for change to pivot.
Yeah, and guys, we're not trying to scare you with any of this information. We're actually trying to prepare you. We're trying to make you a better investor. We're trying to make you more aware because unfortunately, John, a lot of this education, financial, real estate, it's not taught in our public school systems.
Yeah.
So, we got to take it upon ourselves to educate ourselves. And, if you think that, you guys, John, I was a C, I don't know about you, I was a C student, through high school and college. I was nothing special, but, if you just take the time to learn this stuff, you'd be surprised. You'll really surprise yourself, and you actually, because if it's making you money, you're going to have, it's an incentive, right, John?
Yep. Yeah. So it's funny. You were a C student. Like when I was younger, like when I was really young, everything was like perfect up until I was about like 10 or 11 years old. We got hit with a curveball. Before I was living with my dad in a boarded up house, like no heat, no electricity. We worked on the property together, went to like a really rough school, transitioned like transferred from one school to the next, transferred like 6 times until high school graduation. One thing that taught me is that you always want to be prepared for that curveball, right? You always want to be prepared. You never want to have all your eggs in one basket to where one problem could just wipe you out. And so my whole life after that was always based around the like, am I in a position right now where the lights could get shut out? Right. Like, so I would ask myself that even when I was a real estate agent in Beverly Hills and I was investing, like I always wanted to have options. Like it was always important to have options, always important to not be fully dependent on one entity or employer or government.
I agree. Being self-sufficient and always, what can go wrong will go wrong. It's interesting you brought up putting all your eggs in one basket because John, looks like the move we should have made is investing in some chicken coops because eggs are just now. Let's get into that. Do you think that the whole egg thing, what they're saying, it's a bird flu or something? Do you think that this is a man-made? This is just fake news. What do you think about this? Because this is
To like nowadays, like I don't believe any of the headlines with anything.
Agreed.
I'm not saying like it's right, it's wrong, like because who knows how like how this whole thing will play out. I just don't believe headlines, and I like to read and do my own research
Mhm.
and make my own informed decisions versus reading a headline and saying, oh, that's truth. Like look at the last couple of years. I'm sure a lot of us lost friends, and especially because people would read a headline and be like, this is what that means. And like they would get so caught up, oh, I'm on the left or I'm on the right, or I believe this
Mhm.
politician or that politician, or whatever movement or trend was in. Like there's all these shirts that said like I agree with the new thing, right? Like
The
people are just
current
like,
thing.
yeah, the current thing, right? It's like people just want to read a headline and like they just want to listen and mimic what they were told. I suggest people don't do that. Do their own research, and the whole thing doesn't make sense.
John, it's good you brought that up because I had Professor Dave Collum. He's a professor at Cornell University, and he said this to me that really stuck with me. He said, Kevin, if you look at newspaper headlines from 20, 30, 40 years ago and just took all the headlines, you would think the world was ending, we were all doomed. And like, so in retrospect, looking back on those headlines, we make it through it. You know what I'm saying? Like we have a way of adapting. We have a way, I don't know if it's the American dream, the American spirit. We have a way of pushing through this and adapting through the change. And that's what I think we're gonna do, not just me and you, but not just people watching this, but America as a whole.
Oh, 100%. Like there's no doubt. Like everyone's gonna make it through. But the big question is like, what does making it through look like to you, right?
Mm-hmm.
Like what do you define as making it through? Because we look at our like my grandmother, right? My grandmother and grandfather. She worked at a glass factory. He worked at a box factory. They were to pay off their house. They had 2 cars, raised 4 daughters. They traveled, and she saved a ton of money living on coupons, right? Like they were not making much money. Maybe she was making 35,000 a year, right? But they were able to get by. Today, it's just hard to do that at 35,000. It's almost impossible, right? And so the definition of making it through is up to you to define, right? Like for anyone watching this, anyone, that's thinking, okay, I'm going to make it through. Like, what is making it through? Is it having a nice house? Is it being able to travel? Is it having, a nice car? Or is it sending your kids to college or whatever it may be? I would just, yeah, I would just look at what that definition of making it through is.
Yeah, the concept of enough, have it like when is enough wealth, when is enough houses, when is enough, everybody has a different level of what they deem enough. And me, what I tell people is you have enough right now. If you're watching this video, you have enough wealth right now, you have enough money. I'm not telling you don't go, be better, don't try to be great, but you have enough right now. You have a house to live in. I hope if you're watching this, you have a house to live in, what I'm saying? But
Yeah.
John, where can my audience find you, man? I know you do the credit repair. Can you kind of tell us about that and what other
Yes.
kind of things are you working on?
Yeah, so I started greatcreditfast.com. We have an office here in South Florida. I hired a team of experts that work in-house. And why we got into this business is I called this like 8, 9 months ago. As rates are going to start to rise, we are going to start to see a lot of people that are going to be leaning on credit cards that may have issues making those payments. And so we can fix their credit. We can help position them with a better credit score. They're going to be more likely be able to go out there and get good financing to invest in real estate, to be able to start a business, to get debt free. And so that's what we've been doing. We've been scaling this up and helping a lot of people fix their credit. And lately, we've been partnering up with a lot of mortgage lenders that are sending us their clients, fix their credit, send them back. They're closing on home loans. So
They need you. They can, their clients can't get a mortgage without you.
yeah, I think that right now, there's just, and I can't like stress this enough, there's so much opportunity to make money. Like there is so much opportunity because everything has changed over the last couple of years, and everything is going to change over the next few years. You look at all American industry; they were all built on the old way of doing business. Look at how much screen time people now have over the last couple of years. People are getting all their information online, right? People are they're making all their buying decisions. They're buying expensive watches. They're buying, from some parts, even houses. They're renting apartments online. They're buying $1,000 sofas. They're making all these big purchases online. And you can start up an online store. Like there's so many different things that you could do to make an absolute fortune. based on these trends. So I don't think that there's ever been a better time to be alive and a better time to be a business owner in history than now. But it's just important just to choose the right vehicle. You choose the right vehicle, you're gonna crush it next couple of years.
Yeah, John, I appreciate that message. And, something I want to stress to y'all is, if you're in any kind of credit debt, John, I was in, man, like $50,000 of business credit debt. And in my friends who are in credit card debt, it seems like it's paralyzing them. And like when you try to, they'll confide in you and talk to you about it. And, when you try to, promote them and give them constructive ways to help, they just feel paralyzed and they're just like, I'm going to do nothing, because guys, that debt burden really will weigh you down. And we all have different debt tolerances. So some people don't want to be in any debt. Some people are cool with good debt. So John, what are some ways that people can get past this to confront this demon that's in front of them?
Yeah. So I've been in credit card debt myself. Actually I had a situation where I messed my own credit up when I was like 23, 24. I didn't realize, but I took out a Bank of America credit card, had an $18 automatic bill pay payment. I didn't realize that it didn't pay. Like I thought it was just automatically paid. Like it was linked up and I had auto pay. No. And then basically they reported it. They refused to take it off my account and they like screwed up my credit. I'm like, geez, I learned the credit thing myself and I was able to do it. So it's like people should understand credit and credit card debt. But if you're in, let's say, for example, an easy number, let's say $10,000 in credit card debt, right? If you're in $10,000 in credit card debt, I have a strategy where you could probably get debt free in the course of a year with paying no interest, which would be if you have your own apartment, and this won't work for everybody. If you have your own apartment, a one-bedroom apartment, what I would do is I'd probably rent out the bedroom for $600 or $650. I'd live on the couch, and if I was currently making my minimum payments to say $250 a month, I'd make that $250 payment plus the $850 payment or the $650 payment. Add them all up, make it $850 or $900 payment monthly, and I'd transfer the balance to a 0% interest card. And then in the course of 10 or 11 months, I'd be out of debt. Even though I'd live on the couch, it wouldn't be, I wouldn't be as comfortable, but I'd use that as a reason to study, read, to advance myself, and use that as more of like as a tool of motivation, so that when I'm out of debt, I have a business that's thriving. I have this going on now and that going on now, but I'm building out a better life, right? Like making the minimum payments and just trying to stick there is a really, really, really tough place to be. Like it's draining emotionally.
It brings you down.
And it's like 90% of it's going to interest. Like you don't want to do that.
Yeah, and guys, we need to get rid of the stigma that doing what John said is like degrading, or like that needs to be like, we need to motivate. It's kind of like, when you see a big guy, go to the gym, like, he's doing the right thing. You know what I'm saying? So like stuff like this, we need to empower people to want to, because guys, it's not just about paying a debt. When you get that metaphorical monkey off your back, like it's going to just open up your eyes on what you can really accomplish, guys. So it's nothing to be ashamed of. If you're watching this and you're in credit card debt, like I was in it, John was in it, I appreciate him sharing that with us. But John, is there anything you want to leave my audience with, man? We appreciate you coming on though, man.
Definitely. Yeah. So one thing is with social media, a lot of people are flexing, a really good lifestyle. They're going out to the clubs, or they're living really, high and fly. What I would highly suggest is to really, at least for me, I've always had this belief is that, all you want to care about are the people that really love you, that are people that are really, really supportive. Those people don't care about the fake life that you want to portray on social media. All that really matters is for you is that you're happy, that you're doing the right thing, that you're in a good place, that you're growing intellectually, that you're pushing forward, and so you don't want to waste money that you don't have to attract people that you don't want, right? So that's what I would focus on. Maybe decrease the lifestyle if you need to, get debt free, and then try to level up to the next level and bring the people that have always supported you with you.
Agree 100%. As a Stoic philosophy is that we love ourselves more than anyone else, but yet we care about the opinions of what other people think of what's going on in our life, this highlight reel that is social media. Well, guys, look, I'm Kevin Estopanel. Thank you so much if you made it to end this video, man. Make sure to give, John a follow. This is John Williams. That's your Instagram and Twitter handles and YouTube.
Yep.
All right, guys. Well, I'm Kevin Estopanel. Make sure to like this video, comment, give John a follow, guys. We're out. Take it easy.